So thanks for joining the session today. And as mentioned, we are looking at covering learning outcome 3 today, which is basically to understand the impact. So the key bit is to understand. We are not looking at applying anything, or it's not the application bit. It is to know, basically theoretically understand the impact of criminal law on business and professional organizations. So if we dig deeper into some of the areas of learning outcome, it will cover things like legal principles, legislation, and ethical codes of practice towards the management accounting profession. And we look at some of the key concepts of fraud and bribery, money laundering, and obviously the crime related to computing today, which is basically cybercrime. So I've got the presentation here, and we've got the indicative content that we'll be looking at covering in 3 big chunks, which is to understand legal and law and act related things. Then we look at some of the broad concepts of bribery and fraud and money laundering, and then towards the end finish it off with understanding what are the acts related to cybercrime and computer misuse. This particular learning outcome has 4 assessment criteria. There is no merit and distinction in this. It's just the average. When I say average, it's just the past criteria which are there. And we'll be looking at covering some of these pretty much straight away without getting into any sort of background or key terminology, because they are theoretical that we are looking at covering. So the first one that we are going to be focused on and understanding is what is the relationship between legality of things, the legislation and act which are passed in Parliament, and how do we look at relating this to the ethical codes of practice when we talk about the accounting profession in general. So when we look at the broader definitions of ethics and ethical behavior, what we normally define ethics as a set of moral principles or a guide which basically govern how you conduct and work and offer services to clients, or if it's in the area of business, then obviously it's in the case we refer to services that you provide. But generally, if I look at the definition and meaning of ethics, it is going to be a set of morals that guide your individual behavior when you offer any service or act as a part, or play a part as a part of the organization or a business. And obviously the values that you assume and the values that you use, and you use your own parameter to basically set that these are things which are right and these are things which are wrong, would be basically classed as ethical values. And when we talk about these values, they apply both when you work as an employee within the organization. So there are certain set of rules or certain set of guidelines which are provided by the employer in the employee handbook. And when you look at the business or an organization, obviously they are a part and parcel of how the basic policies and practices and essentially limits. When I say policy and practices, is basically the operational side of manual or things which are written down in the organization. So when we talk about ethics, set of moral principles, when we talk about values, that is what governs the ethics which you use in terms of what is right, and differentiate and use these values to differentiate between what is right and wrong. Now, when we look at the accountancy profession in general, there are 6 principles or 6 key areas which we normally relate to or talk about when we talk about the ethical values, and they tend to be in these bullet points, which is when we are in our profession, obviously we need to be able to master some of the skills and techniques to be able to provide professional services. We need to have an objective outlook because some of our services are bespoke and they are customized to clients and clients' requirements. We need to be able to develop an ethical approach to work. So on the moral side, again here, if there are things which we feel are not right, or if there are things that we feel are not being done correctly, then we have the moral and ethical responsibility of actually, bringing it to the notice of relevant authorities and also to the client, so that these could be corrected before it leads to any fines or penalties. And then we are also looking at acknowledging our duties towards the society. Can you think of, duties that which we say to the society in terms of, from an accounting side? Any idea in terms of what do I mean when we say, duties that people need to be able to provide towards, the accountancy side from a point of view of society? So when we look at, sorry, go on.
From the societal point of view, that I'm also looking at it from finance or accounting side. We are meant to provide adequate accountability, and then we are meant to be honest in what we are doing. We're also meant to be guided by the fundamental principles of bookkeeping, which includes we must report exactly what we have seen, exactly as it is, and should not go against what.
That is absolutely correct. So I think from a point of view of looking at, some of the duties that we need to be able to provide from a point of view of providing these services, they need to be true and honest. And from our point of view, that particular bit in terms of how you collect data, analyze it, communicate it, on a larger platform looks at being a part of economic data that the accountants actually look at providing. So when the accounts of a company is actually published on the company's house, and when certain reporting, or say, for example, when we look at, the Office of OECD, basically Office of National Statistics, and some of the key organizations, when they look at compiling data, then they depend on this particular data, which is submitted by small, medium, large businesses, towards the end of the year in terms of financial statements, and that is used for economic output or calculating the economic output of the, of the economy, and that is where the requirement in terms of the accountants actually playing, or this profession actually playing a central role in the society when it looks at contributing towards the collecting, analyzing, and communicating of economic information, which is used at a later stage by various agencies. And now some of the other bits that are self-explanatory include things like, we need to be looking at providing services to the highest possible standards. We need to be looking at achieving acceptance by the public. So sometimes when you look at, statements or records being produced, and we look at some of the large companies, small, medium enterprises, when they do press conferences or when they provide financial outlook. So in terms of providing that has to be rational driven, that has to be something which is factual and accurate, because then it builds reputation and acceptability and confidence with the members of public, specifically when we look at companies which are trading or have or the members of public have shares as far as the companies are concerned, or businesses are concerned. So when we talk about in general about the code of ethics, these are predominantly derived from three sets of different bodies. So there could be bodies which are body of theory and skills. So when you look at an awarding organization or a chartered body, they will create certain standards which are going to be standards defined for or relate into the code of ethics. We will also look at some of them being created by society or governmental or semi-governmental bodies, which basically would look at binding some of these responsibilities or functions which people provide, or services they provide in the accounting profession. And then some of them would be related to adherence of common code. So when I say adherence of common code, that would mean that you would primarily look at essentially adherence to code would be the adherence to law and legislation or acts which are primarily required to be followed. So they will basically also play into the development of the code of ethics. So that will basically allow these codes to be developed, and when these codes are developed in the accounting and financial accounting or management profession, we see some of these codes typically coming across from different bodies. So in the UK, when we look at So when we look at ACCA in general, in the UK, they have their own codes. You see AAT, which is one of the other bodies, they have their own code of ethics. And you look at IFA, which is again having their own code of ethics. But when we look at, the code of ethics being, designed and, let's say applied internationally, we normally see that this particular code of ethics would be, defined by two major bodies in the world, which is looking at, ICAEW, which defines the code of ethics, and then the ethics for professional accountants, which is IFSC, and these are the two bodies that will basically look at, formulating an overarching structure in which, these codes and ethics are then finally translated down into various organizations which follow them as fundamental principles to maintain integrity, and have objectivity in terms of providing those services, looking at dealing and providing these services with a bit of professional competence, and also ensuring at the same point in time that due care is taken in order to maintain confidentiality, data protection, and to a certain extent, making sure that they are able to then, let's say, provide standards which are required and are meeting what are set by these overarching bodies. So let's look at, how we in general look at deciding on, what are the various ethics and ethical behavior that we need to look at. So if I just broadly look at this particular diagram or a flow chart, just give me 1 second, there's a bit of a record. So when we look at this particular chart and we look at how they look at informing and look at forming the codes of ethics, we look at law and legislation, the acts which normally come in. We look at obviously from our point of view of what the society contributes, and then some of the chartered bodies which basically contribute to the development of what is called the code of ethics, and that is where we decide on these 6 underlying principles that we talk about, which we as accountants or management accountants need to follow, and that is where they become important for our looking into what we call ethical codes or ethical code or code of ethics in terms of our practices when we provide these services. Now, in terms of the fundamental ethical principles, if we talk about, and if we drill down a bit further, they consist of these 5 that we talk about: integrity, objectivity, professional competence, confidentiality, and professional behavior. And they correspond to these, 5 broader definitions of what the ethical practices and principles are when we talk about the accounting profession. Now, how do they come about? We talk about that some of these are, revisited every few years by various chartered bodies. There are new sets of, let's say, guidelines which are introduced because of the introduction or revision of any acts or legislation, and also changes which are then introduced because, there are new services or new types of threats which are being faced by this particular sector. So bodies like ICAEW and IFSC then look at, revising some of these 5 fundamental principles, and a revised code is established to form a conceptual framework, which basically is followed by our professional accountants, so that it ensures that there is a compliance side of things with regards to these 5 basic principles that everybody is required to follow in this particular profession. Now, when we talk about principles versus rules, do you understand the difference between what is a principle and what is a rule? Any idea in terms of how would you differentiate between a principle and a rule? So when we talk about, say, for example, a rule that needs to be or is defined as a set of explicit regulations which are set and everybody has to follow. And when we talk about principles, they tend to be propositions which are put forward, and they serve as a bit of a foundation for you to be able to follow these rules. So sometimes in businesses, what you would see is, or organizations, you would see is that the business has or the organization has their own values and beliefs, and they basically originate from the core, understanding and the raison d'etre, or for example, the reason of existence of that business, and that is where the principles of that particular organization or that business actually come from. But when we talk about, the rules, and also when we talk about principles, they generally tend to be related to the bigger picture. So if you start a business, or if you're in this particular profession, what you generally see is that some of the overarching approaches that you would need to adopt, or best practices that you would need to adopt into your own business or your organization, will actually be influenced by principles. And then when we talk about rules tend to be very explicit, regulations, or say, for example, areas of conduct which are governed by certain body, and they have to be followed in principle. And that is where the approach tends to slightly differ when we talk about the principles that we apply in terms of my day-to-day working, or when I offer these services on a day-to-day basis, and the rules that I apply in producing or providing these services, because they are mandatory compliances that we need to exercise, and ultimately make sure that we are adhering to an overarching authority which is required, which will be essentially overseeing us in terms of ensuring that the compliance is there with the acts and legislation. So when we talk about the principle-based approaches to ethics, it encourages case-by-case judgment, because all your clients are different. In some cases, requirement of the clients are different. So what you do is you are governed by the principles that you have, which are the accounting principles, the 6 accounting principles that we have, and you're basically looking at being governed by that, and that is where you use those overarching 6 principles to be able to provide the service. When it comes to rule-based approach, what we are looking at is sometimes you would have to be binary, for example, to say, okay, this is something which I can do, this is something which I can't do, because it takes you against the rule of law or the law of land, specific for a particular, service that you're providing. So sometimes you would see that there are approaches which we need to develop. These approaches tend to be either principle-based, or they tend to be at least, on the rules side based. Now, the approaches and the rules-based approach principally applies to, looking at compliance with law. So here, if the VAT has to be submitted, for example, or if your PAYE for a company, if you're a small company and your PAYE is, say, about £1,500 or £1,800 or lower, you can still submit the PAYE, on a quarterly basis. But if you're a bigger business and your PAYE exceeds the 1,800 kind of a limit, then you have to submit that monthly. Similarly, there are certain bits which are defined, and there are rules which are defined, and they need to be adhered to or followed, and that is where we will differentiate. Sometimes in businesses, when you deal with small clients, your approach is going to be more principle-led, or it will be principally led to ensure that it is customized and bespoke services are being provided, but still so within the remit of, the rules being applied, or when I say rules being applied, certain compliances being, making sure that certain compliances are met, because those are requirements for you to be able to provide those services. And sometimes when I look at rule-based approach, you will have to look at cases in which there is no ambiguity, there is no case-to-case by judgment which is possible. They are easy to enforce because they've been enacted into act by the Parliament, or they are a requirement that all companies have to adhere to, and there are very little places where interpretations can be made. So a case in point here for a rule approach would be an example that on the Companies House, every year, any company, say for example, which is operational, you need to file your AR03, which is the form that you file to show that the company's operations are continuing, and that statement has to be filed. If you have a termination in the company, you need to fill up a form for a director. If it's a director or a key position of the company, a form has to be filled and a new director is appointed. You have to look at that documentation. But in the case of a small company, sometimes what will happen is that if these things have to be done, when I look at, say, for example, under the COVID-19 pandemic, you see certain companies have asked for an extended period of accounting. The government has actually deferred the payment of VAT and, to a certain extent, deferred the payments of corporation tax. And this is where the government has taken a principal approach so that it can be applied across the sector, because obviously a lot of businesses during this pandemic are struggling, and that is where the government has taken up a bit of an initiative to, come up with some of these schemes which allow businesses to tide over that, trying time. So you will need to balance between a principle-led approach and also on a case-to-case basis, because this is a case-to-case basis application, and sometimes you will have to balance and follow the rules-based approach, because that is a mandatory compliance which you have to do or deal with in terms of, the law or, for example, the legislation. Now, the main bit that if I just go back quickly and recollect, is that in this particular learning outcome, what we need to be able to do is understand the impact of criminal law on business and professional organizations. So when we talk about these two categories of law, criminal law and civil law, what we are looking at is that accountants are affected by laws which sometimes may not be very obvious, under the interpretation of criminal and civil law. So here, sometimes things like, health and safety legislation, employment protection and equity laws, they might not directly apply to you because this is more or less related to the employer. But when it comes to data protection, when it comes to, for example, things like money laundering, fraud, bribery, they will still apply, and they would be required from a point of view of, compliance when you have to, make sure that these are being complied with when certain statements or, bits of services are being offered under the accountancy profession. Now, when we talked about, some key bodies, these are some of the key bodies I'm pretty sure that you're aware of. So when we talk about the code of ethics being developed, both on the accountancy side and also industry-wide, one of the key bodies which looks at moderating and regulating some of these codes of ethics and principles which are required is a body, the International Federation of Accountants. It's a body which represents most of the accounting bodies or chartered bodies in the UK and the US and in the Asia Pacific, and their rules and the code of ethics that they basically undertake studies in, sometimes when they have to be revised, they are the ones which establish that conceptual framework, and then this is to ensure that compliance is there. And it's easy for us to, compare statements in the US or bankruptcy in the US with Chapter 10 in the, bankruptcy here with the Chapter 10 in the US. So the idea is to make sure that there's an even keel or a platform through which we are able to make these comparisons, and that is why these code of ethics have to be, made. There's another body called the Consultative Committee of Accountancy Bodies, which is CCAB, and these bodies basically have, this body has about 5 members, so it includes ICEAW, ICAS, SIPA, and certain of the sponsoring bodies. So in this case, AAT and ACCA comprise of this particular committee, and they also work and coordinate together to come out, with codes of ethics and set the standards as far as the accounting and accounting practices are concerned. In the UK, we deal with HMRC, obviously Her Majesty Revenue and Custom, which is obviously a government department, and the aim here is to ensure that taxes, VAT, corporation, whatever, liabilities the business has are paid on time. And, obviously, if they are not paid on time, penalties and other repercussions, or are imposed or sanctions are imposed. And when we talk about this particular aspect of fraud, bribery, money laundering, and computer-related crime, this new body, which is the National Crime Agency, came into being. And when we talk about the National Crime Agency, which was set up, by the government, they are an agency which basically enforces national law as far as the, it's a lead agency which basically enforces most of the law related to, company and companies side of things. And that is where they are looking at dealing with, they have a wider remit, but from an accountancy and from our knowledge point of view, obviously as a body, NCA deals with, cybercrime, they deal with drug trafficking, human trafficking, terrorism, and a couple of other related, areas. But from our point of view, they will primarily be focused on, looking into money laundering, bribery, fraud, and those kind of, related areas of, transactions. So when we talk about business ethics, professional values, they are the ones. So in this particular task, what we have to do is I put together a couple of slides explaining some of these in detail. But the main task here is to primarily understand, what is the relationship between essentially, ethics, ethical behavior, and then how they are formed, how these code of ethics are formed, what are the bodies which basically, contribute towards the formation of these code of ethics, and why is it important for us to follow these, which is from a point of view of society, which is from a point of view of adherence in terms of law and legislation, or law of land, and then in some cases compliance, because they are mandated by, the professional bodies which create these code of conduct, and they tend to be the ICAW and IFAC, which are two signature bodies which basically ensure that these standards are, when these are created, they are standard across the sector. This allows for compliance to entail when we offer these services, and at the last but not the least, it also ensures that there is answerability both to the members of public, to HMRC, and some of the key bodies when we look at providing these services. So this will also be helpful when we look at to cover this particular task. Now, one of the other things that I will differentiate by putting one or two slides on this would be, sometimes we only think about small businesses and small organizations. Now, when we look at the code of ethics, when we look at principles of morality, when we look at some of the duties which businesses, organizations have towards the society, there is this particular bit that we looked at in Learning Outcome 1 when we talked about the Companies Act, we talked about corporate governance, and then we talked about the overarching area of company law, which is different from the Companies Act, and these three have now become specific areas within when we deal with these three side of let's say different side of operations when we deal with companies. So there are bits and pieces which are covered under the Companies Act. There are bits and pieces which are covered under what is called the let's say the corporate governance, and there are bits and pieces which are covered primarily under the remit of what we basically say is under the civil and criminal law side of things. So when we talk about large organizations which create and obviously when they look at their code of ethics and when they look at their operations towards the market, they also talk about things like sustainability. They look at recycling when we talk about reducing the amount of carbon emissions that they are able to they are producing or contributing to when they produce these goods and services, and they are all under the umbrella of what is called the corporate social responsibility. So when we talk about corporate social responsibility for large organizations and we talk about code of ethics, we talk about the professional standards that they are looking at adhering to. Some of the organizations on this side are basically also referring to this all under a banner which is called CSR. And CSR will cover things like recycling, reducing the amount of waste which goes to landfill, sustainability. We talk about reducing carbon emissions. We talk about global warming, and they are contributing towards that agenda by basically reorienting or reinventing their operations so that they are contributing less and less to these side of things, wherein they are helping to preserve the environment and also have a responsibility by giving back towards the society. And in the accounting terms, when we talk about this is something which was recommended by the Blunt Trend report in 2008 when they came up with this concept of what is called the triple bottom line. And the triple bottom line essentially, when we talk about it, basically, talks about the 3 Ps, which basically means profit, planet, and people. So here, the triple bottom line concept could apply specifically towards larger organizations wherein it is also referred to as a part of an accounting framework, wherein the 3 parts to the accounting framework include things like economical, or when I say financial and economic, they talk about social, and they also talk about environmental. or in some cases it is also referred to as the 3 Ps when I mentioned planet, people, and profits. So the companies should be looking at adopting the TBL framework, which is triple bottom line framework, to evaluate their performance from a broader perspective of how they create value for the society, and how they help in conserving the natural resources which they are utilizing, so that we are able to hand over credible resources for the future generations or for the younger generations to come. So this part you will get to see as corporate social responsibility in large organizations when they publish their financial statements or their annual journal reports, and this tends to cover this particular concept of how they look at their code of ethics and the principles of morality in order to ensure that the company generates suitable amount of profits. These profits are shared with the employees, staff, suppliers, and in general the society. They're giving back to the society, at the same time making sure that they are helping to conserve the environment, and if they are using natural resources to produce goods and services, they are doing it so in that manner that allows or does not cause long-term harm to the environment. So any questions on this first task? So basically we are looking at covering the key 3 terms, which is related to ethics, ethical principles, and then how they can be applied towards the accounting profession in general, which are the key bodies which basically contribute to the development of this conceptual framework, the code of ethics, and then where do we get to see them being applied in small, medium, and large organizations. So the sustainability and CSR would be in the large organizations when we talk about preparation of accounts, reflecting the statements correctly, and making sure that there's a compliance with the regulatory side of things to publish the accounts once a year, whatever the annual cycle is. They would be looking at towards the small and medium businesses.
Excuse me.
Yeah, go on.
Sorry. So are you saying that the sustainability, or what do you call it, CSR, the social responsibility issue is only applicable to the large organization? Does that small units, I'm talking about those with a balance sheet value of 650,000, are we saying that they cannot report on sustainability issues, or they are not expected by the law to report them?
Well, the corporate governance side of things in terms of the organizations in general is not required to be is not requirement by the law. This is a field which is coming which has come up in the early 90s and has become quite important, and it relates to companies voluntarily talking about corporate social responsibility. Now, what I mentioned is that this is not specifically let's say related to let me rephrase. So what I mentioned earlier was that this particular side of things we get to generally see in large organizations, because the agenda is large, the turnover or the size of the organization or the utilization of natural resources and some of the activities that they do actually contribute to a larger scale, wherein they are recognizable, both in terms of recognizable for society, benefits to the society, and also effects or impact to the environment. So most businesses on this side would generally have some sort of an agenda under the corporate governance, wherein they would either include sustainability or say for example reduction in the carbon footprint. If I look at reduction in carbon footprint, it could be specific to industries which are in the petroleum sector or which are utilizing large amount of natural resources. We talk about materials being sent to the landfill, which could be mostly retailers, grocery retailers, where the waste is coming out, repackaging and other bits. So this tends to be an agenda which is normally seen. I'm not saying it's not something which smaller and medium organizations cannot have, but it's normally seen as reflection in their annual journal reports, because the organization's footprint and the operations are large enough wherein these things become credible, and they have credible importance from a point of view of either the top management driving it or the requirement from a company's point of view, because the business is so large that they need to be able to balance some of these responsibilities towards planet, people, and profits, and how much profits they make. But it could be surely a part of small and medium businesses as well, and there could be different connotations through which they look at defining sustainability, or they look at corporate social responsibility from their aspect. So, for example, a lot of small businesses contribute towards charity, and that is their way of looking at giving under CSR back to the society. But when we look at large organizations, so you get the point that if they are utilizing natural resources, then the remit tends to become broad, and that would include lots of things like water recycling, waste recycling, sustainability, carbon footprint, global warming, and things like that.
Thank you.
Okay. Now, let's get into the second criteria, which basically talks about explaining the elements and consequences of malpractice, fraud, and bribery. So before we get into some of the explanation, we need to look at some of these key terms in terms of what is fraud, what is bribery, what is malpractice, what is corruption. So I've covered some of these as basic definitions. So when we talk about corruption, so in terms of the general meaning of the word corruption, when we talk about there could be different meanings from a point of view of looking at dishonest or fraudulent behavior, or conduct which is generally being done to gain some advantage. But when we talk about corruption from a point of view of the organization or a business, we are basically looking at limiting it to illegitimate use of the office, title, or power that you have in order to basically carry out activities which can lead to different types of crimes. So corruption itself is a process, and the outcome of that process could be leading to bribery. It could be leading to, for example, fraud. It could be leading to money laundering. It could be leading to several different types of crimes. So corruption tends to be a process, and the outcome of that process tends to be, when we look at bribery, it is not limited to obviously giving or greasing the hands of individuals, or essentially giving money or accepting money to gain some sort of illegitimate advantage. But you will generally see bribery can happen in kind, can happen in in terms of money terms, but it can also be in terms of favors being granted, and there are lots of different types which can be types of activities which can actually be termed to be or classified under what is called bribery. So in general, if you look at the definition of the word bribery, it is basically giving or offering something which would create an unfair advantage for an individual, business, or an organization. Now, when we talk about tort law, if you remember the learning outcome, one of the things under the law of tort was negligence. Now, in this case, if you're basically looking at a crime being committed or an error being committed, and that has happened because you weren't aware of it, or you were indirectly not aware of it, then this particular thing would be covered under what is called negligence. So any act or omission which falls short of standards which are expected of the profession, will fall under what is called negligence. Now, if you were supposed to file the corporation tax and that has not been filed, obviously it is considered an error first time under negligence. You have a small penalty that you will end up paying depending on the turnover or the corporation tax which is due. Sometimes you would see the HMRC starts to charge you certain amount of interest on a daily basis if the amount is not paid. So in those cases, you're looking at, committing errors which are primarily because the timeline has not been met, or, a deadline has not been met, and a particular, requirement in terms of completion of work has not happened. And in those cases, you would generally see that happening because of being negligent. That means you were not, careful enough to be able to ensure that, the duty or the task which was supposed to be, let's say, completed and has not been completed, and that leads to, a minimal amount of fine or some sort of interest charge, or, things being paid to, in this case, an example, to HMRC because you've overstepped the time or the timeline to be able to pay that. Now, when we talk about fraud, in particular, obviously not talking in general about fraud, but we talk about, say, when we talk about fraud, it would be something which has been done wrongfully. It could be something which has been done by using deceit. And in some cases, when we talk about fraud from a financial terms point of view, this would mean that either an organization business is, gaining or is standing to gain large sums or large sums of money or favors, and that would all be basically termed under fraud. Now, when we talk about fraud, we know that from our knowledge and also from what we get to hear on news, that fraud can be of different types. Fraud can be carried on by individuals under their own name, or you could also do fraud when we talk about stolen identities. So I don't know how many of you were tuned in, but a couple of days back there was a news that the government has lost some billions, I think 4.8 or 8.4 billion pounds under the universal tax credit fraud, which is primarily because of stolen identities of individuals and falsified claims have been made, and the fraudsters have made off with the money. So universal tax has led to basically, or the example that I'm trying to say here is that in this case, fraud has been committed by fraudsters in terms of mistaken identity or, looking at using identity of different individuals to be able to commit fraud by claiming money falsely under universal, credit scheme. And when we talk about frauds, there can be frauds in all different sectors that we deal with. So it could be frauds which are related to identity fraud. You are looking at mortgage fraud, credit and debit card fraud, which is when cards get stolen, the numbers get stolen, or they get used, online or for other purposes by different people. And in those cases, you look at various frauds being done. Now, when we talk about, corruption. Now, when we talk about corruption, so corruption can, obviously, when I mentioned it is a process, but the main forms of corruption that we need to be able to study under this particular assessment criteria is bribery and fraud. And bribery and fraud, could be when we talk about businesses, sometimes, you're wining and dining with a key client, and that is seen to be, outside the remit of what the business normally does, but you're basically providing a favor. So if the business owns a house or business owns, for example, certain facilities and they are provided to a client, to the client to which they are seeking favors, that would be seen as a form of bribery. Now, again, in the last couple of days, our previous Prime Minister David Cameron has been in the news, and when we talk about the company Greencell, which he was trying to lobby, for to ensure that the government funds could be made available to the organization, and in those cases, sometimes he's used the corporate jet of Greencell to fly from his residence in London to, say, for example, destinations in Plymouth and things like that. And that would be an example of, bribery. So although he was working, but he was being graced, or obviously he was using services of the company, using services like the private jet, and they would be seen as softer form of bribery, even though he was employed as a consultant or, as a key consultant within the organization to help seek the company, loans or, funds from the government. So when you look at offering, say, for example, a ticket to a client of yours, take them out for dinners, they could be reflection of, good relations that you're trying to develop with the client because you're soliciting or you're seeking additional business or increasing to seek, business from the client. But when you're paying reasonably for them and they are seen as expenses for the business, they would not be termed as bribery. But because they have been demonstrated or, the actions being done are demonstrating, basically, let's say, services that you're trying to seek from the client, in those cases, we will differentiate it and they will fall under hospitality. But when you look at large sums of money or large sums of money and favors being granted time and again to seek business or, to get an advantage, that would be termed as, bribery. Now, one such example that we generally get to see when we talk about, the concept of bribery in general, what we see is that this would constitute, things which are offered, promised, they are given, or they're accepted, or in some cases, some of these are accepted as because you're soliciting for an advantage or a favor in the future, and they would be termed under as bribery. So one of the things that we also look at is, the cash for titles scandal, wherein every year the government brings out a list, and you generally see peerages and titles being handed out. And in some cases, what has happened in the past is that we have seen that the government has come under increasing scrutiny. There have been people which have been included because they've been donors to a particular party, or have shown allegiance towards donating funds to a particular party. And in those cases, they are termed as bribes and seen as bribes because they are basically being used to solicit it, let's say a title or an advantage in this case, and they would then, under the law, a rule of law, invite what is called, they will be termed as illegal, unethical practices. And in some cases, if it is established that this has been done to seek that favor or get that advantage, then obviously criminal, liabilities or criminal prosecutions would entail. Now, how do we relate this to the accountancy profession? So after understanding them broadly, how do we see that they are related to the accountancy profession? Which is where we basically, come in. So when we see the UK, let's say the Financial Reporting Council, FRC, they regulate, most of the activities which go on and are provided under the accountancy sector. And when we look at actuaries, actuaries tend to be, businesses or let's say calculations which are done based on, mathematical modeling or statistics, and they are basically used to define future events. And in those cases, when we look at these future events, when we talk about pension funds, when we talk about long-term bonds which are issued by the government or the treasury, you generally see that if these mathematical calculations or statistics calculations which these organizations do are more optimistic or are, say, for example, pessimistic, it affects how the share market or the stock value of some of these bonds and let's say the pension schemes and how some of these shares actually float and work in the market. So when we look at our profession in general, here the Financial Reporting Council, FRC, basically looks at regulating these activities to ensure that instances of corruption, bribery, fraud, and malpractice are minimized. And they come out with codes or standards of corporate governance and reporting in audit and assurance, which are required to be followed by accountants, by large accountants and companies which provide these services. And this ensures that the codes of standards that they bring out and the rules that they publish ensure compliance and regulations are met, and non-compliance, if it happens, then it is dealt with through the disciplinary action route. So when we talk about, in general, how to minimize the instances of fraud, corruption, and bribery within this profession, the key body which comes out with the standards and is responsible for setting and upholding these ethical standards to ensure that these crimes are minimized or these practices are minimized is the Financial Reporting Council. Now, there are different approaches which this council takes, and under this approach, we could look at a reactive approach, we could look at a proactive approach, and obviously I've put some details down on the slide to explain that reactive approach tends to be, if I give you an example of the financial crisis of 2008, and after that, the dissolution of the Financial Services Authority, part of that responsibility being given to Prudential, and the creation of the Financial Conduct Authority were a reactive approach by the government to tighten some of the regulation around how, the banks finance and do lending within the market. And when we look at a proactive approach, so why this was a reactive approach? Because this was done after the crisis has happened. This is done predominantly after the lessons have been learned, and the lessons which have been learned have now been incorporated into the new standards, and these standards have been revised and then made more stringent so that these kind of mistakes cannot happen in the future. But when we talk about the proactive approach, The proactive approach tends to be wherein these kind of scandals or practices are detected beforehand, and in general, what that tends to happen is that before these crimes or these kind of slippages can happen, which lead to large scale let's say losses, the proactive approach tends to put some light or shed some light on these ways of working, and that allows these to be caught before the eventual mishaps happen. So one such case would be when you look at companies which are required to do rigorous testing in terms of when we look at capital maintenance, or when we look at cash flows, when we look at some of the companies which take out loans. As an example, if you're a small business or a medium business and you're a business or an organization, if you're looking at taking out a loan, the banks, your business manager or your bank would carry out a stringent review of your accounts for the last 2 years. They will go through various ratios to see and stress test whether you have the ability to be able to pay back that loan, whether the bank should lend you that much money or lend you that much money in terms of overdrafts for short-term borrowing and long-term borrowing in terms of loans when the companies or organizations look at acquiring assets or seek, say for example, a larger loan from the bank. So in those cases, the stress testing, which is primarily done, is done through the route of what is called the proactive approach, in order to ensure that these audits and this proactive approach ensures that these kind of scandals or problems cannot occur, or can be avoided and should not occur in the future. Now, why is it in the public interest that the Financial Reporting Council comes out with these standards and ensures that these compliances are actually set? And this is primarily done from a point of view of ensuring that there's generally safeguarding of the public interest, or essentially the public money, or the money which is the taxpayer money, which is protected specifically when it relates to public sector organizations, or in which there are partnerships between private and public sector. So specifically when we look at pension funds, wherein most of these pension funds, they invest heavily into private equity funds, and and the idea there is they want to look at certain amount of standard returns coming across to the organization, which allows these pensions and certain maintenance of these pension funds to be done. And sometimes we get to hear that there is a deficit or a hole in this pension fund, or and sometimes you would generally see that the government has to step in. So one of the last things that we saw, the British Home Store PHS, Sir Lord Green was asked to, when he sold the company off, he was asked to fund back 320 million towards the pension fund, which is what was established, that his company had taken out profits. So these are instances what we get to see, that in the public interest, the legislation and the standards which are set by the Financial Reporting Council are used to make decisions which basically protect the interest of the members of public, and in general benefit the society. So when we see this particular bit happening, we see that this is down to the proactive approach, which basically looks at protecting the interests of the members of the public, and in general some of these rules and regulations are used in the interest of society as a whole, and that allows greater good to prosper, both for individuals, for organizations, and for companies. So in this particular learning outcome, the assessment criteria 3.2 of learning outcome 3, we are looking at basically explaining what are the concepts of fraud, bribery, and malpractice, what are the key organization, which is the Financial Reporting Council, and what role do they play in terms of ensuring that these practices are avoided. Any questions on this? Okay. Now, when we look at the third assessment criteria, it talks about explain the offenses and penalties which are related to money laundering. So let's look at the key term first. What is money laundering? Now, money laundering is a process by which proceeds of crime can actually be used to, so when I say proceeds of crime, what I mean by that is that when we look at money changing hands money which is used for purposes of crime becoming money which is legitimate money or is being used as a legitimate source to fund activities, then in those cases that would be termed as what is called money laundering. Now, when we talk about money laundering, obviously, and the meaning of money laundering, essentially that means you're looking at concealing the origins of where the money is actually coming from, where is the cash coming from, where is the money being obtained from. And typically this means that when you look at large transfers of fund which are happening between banks or between different accounts within a bank, then in those cases, if the legitimacy, that means the righteousness of the transaction cannot be established, then in those cases, you would term this as money laundering. And, money laundering could be done in lots of different ways. So money laundering could be done in terms of, embezzlement. It could be done in terms of, drug trafficking. It could be done in terms of, these are the activities which it could fund. Terrorism could be funded by money laundering, wherein sources of fund are not known. They are transferred over to a different account and they are being used to fund activities which would lead to, crime or some sort of a crime happening. And that is where we generally say, it is money laundering, which is converting illegally earned money into legitimate money. And that is where the government steps in and says that if the money has not been taxed at the source wherein it is being charged, created, or earned, then in those cases, when we look at accounting practices, then this would account as something what is called, sometimes also referred to as black money. So money which is earned or transacted and is converted using illegal means to turn that into legitimate source of income or money itself would be the process of what is called money laundering. Now, when we talk about money laundering, there is a specific act which the government has created, and this particular act, POCA, which is called the Proceeds of Crime Act 2002, basically deals with all the crime related to let's say the aspects of money laundering. So it could be done for property, it could be done, say, for example, for various activities. And you see again in the news, just to give you an example, a couple of months earlier, it was in the news that a lot of money is being used, from countries like Russia and in the Middle East to buy properties in London. And there is no way that the source of money could be defined. And in one such high-profile case, the wife of the Ukrainian ambassador, her assets and other things were confiscated by the government under this particular act because she had done worth, say, 15 million pounds worth of shopping just at Adherence. And there was no way to legitimize the source from where the funds have been coming, or where this money has actually come from. So when we talk about the act, which is POCA, which is Proceeds of the Crime Act, it sets out the the remit, or let's say the scheme through which recovery of criminal assets could be done by the government, and in some cases the confiscation of assets, money, or so let's say objects could be done in order to ensure that at some stage they can be used as proof or as evidence to make sure that a conviction actually takes place. So this particular act essentially establishes and gives the various agencies the power to recover such assets or proceeds which can be which are basically considered being used or converted from which do not or have not any source to be able to prove that the monies from the transactions have been generated legitimately. Now, when we talk about money laundering, obviously we see a lot of money laundering happening because businesses, individuals would invest into property, and this is where they will try and evade taxes, because in some cases when property is bought, you generally see that they would be bought under different names or under different let's say ownership, and in such cases you would generally see that the process of acquiring such property is primarily done for looking at purposes of tax evasion. So when we talk about tax evasion, that would also be looking at one of the areas which is covered under the POCA Act, and that would mean that in this case, if such an activity is to be found, then the agency has the right to be able to recover and make provisions, primarily to be able to confiscate some of the assets and then use them later as evidence for convictions which take place under the remit of what is called the Proceeds of the Crime Act. Now, this particular act primarily focuses on, primarily understanding, is the source of money or funds legitimate, and has the business failed to, say, for example, report, the money which is being generated from such activities, and has the tax being paid off on this particular generation of funds or money which has been done. Now, under the Act, obviously, there are different prison terms or convictions which can happen if you fail to disclose, say, for example, the source of money or how this money has been generated, and it has not been reflected in the accounts. Then obviously the maximum sentence in those cases is 5 years. But yes, if you are looking at, tipping off, that means you are essentially tipping off from the proceeds of crime, or tipping off from the money laundering side of things, then what you're basically going to be looking at is a section which is under this particular act, which is the section 333, which talks about tipping off. And that section, tipping off, basically means that, it is an offense to make a disclosure likely to, to an investigation if it is happening and if it's undertaken, and then you have not, cooperated and not declared that how this money has been accumulated or how this money has been generated. And in those cases, you would see that the maximum, penalty or offense, the imprisonment in the case of this particular offense is 5 years imprisonment. So when we talk about, tipping in general, this is generally seen in the regulated sector. It comes under the criminal law side of things, and the Proceeds of Crime Act 2002. And here, if a person is helping to tip off the authorities, and that leads to a bit of a conviction, sometimes you would also see that a reward is also offered, or in some cases some sort of an appreciation is also offered, because that has led to a conviction and an investigation, which finally then leads to confiscation of assets and leading to a conviction. And in most cases, if money laundering is established, then the maximum imprisonment, is primarily for a period of 14 years. And in those cases, obviously, the sentencing and the judge and the court essentially can sentence a person to a maximum of 14 years in jail, because it has been established that the activities of the business or the organization have generated money which have not been legitimate and have been used to fund activities which are not legitimate, and that would tend to be termed as what is called money laundering. Now, when we talk about fraudulent behavior, as I mentioned earlier, fraud tends to be deceit or use. Go on. Go on.
So, Raman, if we are discussing about money laundering, and we are accountants, because in future all of us were thinking about that. But when we are finalizing accounts for our clients, they provide all details to us, and we finalize accounts according to that. So we don't have extra information or anything that we analyze. Either they are like doing some sort of money laundering or something. So, well,
in this case, what tends to happen is that sometimes you would, not sometimes, at the end of the year, when you're filing the accounts on behalf of the client with HMRC, you would normally send out a communique or a communication to your client to sign off these accounts, because you're acting on behalf of the client. So it is imperative for you to be able to take signatures or some sort of a nod and approval, whether it's electronically or in person, or on the accounts which are generated. And in those cases, when the director or the owner of the business is signing that off, they are actually agreeing that all these accounts are correct. So in some cases, when the responsibility of, fraud, and under the fraud and the banner of fraud, you look at money laundering and activities which come in, sometimes you would see bank statements have to be scrutinized, transactions have to be scrutinized. So when we look at principles of morality and we look at code of ethics, you would be, in your rights to be able to question the client in terms of what is the source of this income. Because at the end of the day, when you offer these services, you understand that, and when you collect the key information, know your client, KYC, when we talk about it, you know all the activities of your client, you know where the business is coming from, what are the money or the cash flow coming from. And if you do see irregularities in that, then obviously at some stage you do get into some bit of questioning, even if it's direct or indirect questioning. But that tends to establish, where the source of funds are. And when we look at, with this particular aspect, you could disagree, to some of the activities from an accounting profession point of view, to say, okay, it is not, it is not something that I'll be able to report, or this is not something which I'll be able to include because I don't know the source of funds or where the money is being transferred or where the money has come from. So when we look at the accountant from a point of view of business, you are making sure that you comply with accounting and tax rules. And that is where the side of questioning tends to happen, wherein you are actually discovering this, and the bits which basically help you in such a way is, say, under Section 333 or 334 of the POCA Act, you're able to tip off the relevant authorities if the client, or if you do see some sort of activity and that is something that you want to report. So it is going to be dealing with looking at principles of morality and obviously code of ethics, but you would be in your own right correct to ask questions from your client when you see irregular activity happening, which is showing large sums of money coming in and, not being directly related to the services or activity of your client, which the business actually offers.
Yeah, can I add something there?
Yes, go on.
Yeah, a practical example is if you are doing a bank reconciliation and you happen to see a bank statement where maybe in a particular deposit account, you have seen something like £10,000, 15, 7, pounds, £2,000, and all of a sudden you see £700,000 deposited somewhere. That is outlier and it's a trigger. Then you should be able to investigate that and say, we have not been seeing, your turnover is not up to this. How come this amount of money is gone? You can qualify the account if you want, but alternatively, you can query the directors and say, please explain how the source of this income, which is outside, it has not been regular. With that, also inform the authorities that this is what I have observed. Meanwhile, when the bank statement is handed over to you, take photocopy and keep, because that is an evidence that you have found something which is suspicious, don't know until it is established.
Absolutely correct. So when you look at large sums of money being placed into account, when we look at limits which have been sent in terms of how much you can transfer online, say at £10,000, and you see large amount of sums being deposited subsequently, you're able to query that amount. When you see large movements or regular movements of cash happening, which are not related to invoices or transactions, and when you look at certain activities wherein, as Mr. Chima mentioned, large sums of money coming into the account, then obviously in those cases, you have the right to be able to ask the directors or the owner of the company in terms of where is the funds coming from, what is the legitimacy of the funds, against what invoice or what business transactions, and that tends to be one of the activities or responsibilities that you have when you're doing a bank reconciliation for your client.
Thank you. Brilliant. Thank you. Got it. Thank you.
Now, in this particular, task, we also need to look at, the aspect of, say, fraudulent behavior. So where are the places or sources through which we look at understanding where is fraudulent behavior happening? So when we look at group of companies, when we look at connected companies, we have you have a director, which is a director of several companies, or a person who owns several companies, and you see money being moved across different companies without services or relevant activity happening. You would generally see and kind of see this as a bit of a behavior which is alluding towards some sort of a fraud happening. Now, what we've also seen is that sometimes when we look at insider dealing, so when we talk about insider dealing, if the company is listed and members of the public own the shares, if, for example, the companies to bring out and hold an annual journal conference, or if it's bringing out and doing a press conference, the company profits are going to report this much profit, this much revenue, and if that is going to lead to, say, for example, a jump in the share price, and you have that information and you use it to the benefits to benefit you or your clients, then this would be termed as insider trading or insider dealing. Sometimes you would see money laundering we have covered. So money laundering would be large sums of money, cash movement happening, or cash conversion happening against from the company account, wherein the company is investing into assets or buying a property or investing into real estate, buying assets which are sufficiently obscured, for example, not required by the business. Then you would see that this money is being transacted primarily for the reasons of laundering. Bribery we've covered, which basically means that favors, in some cases money exchanging hands to get favors or undue advantage or illegitimate advantage, and that would be seen as bribery. Now, when we talk about all these type of activities which can be connected to companies, they will all relate to what is called fraudulent behavior. So if you have insider information and you use it for benefit of your own purposes or benefits of your for the purposes of your clients, near dear ones, that is also fraudulent behavior. Bribery is fraudulent behavior. Large sums of money exchanging hands, and if the source cannot be determined, would be termed as money laundering, is also fraudulent behavior. And if you're aware of it and you still don't take action, that will also amount that you are constituting or being a part of this criminal activity, and that will also mean that this is fraudulent behavior. So essentially, looking at an example here, if a company is to file its accounts or file its annual return, and if you fail to deliver the accounts or annual returns on time, then it is a criminal offense. If that is happening successively and it has been there is no genuine or a legitimate reason for it, then in some cases you would see that if these crimes are established, or if this particular offense is established and the directors of the company default, then this could be creating a criminal record of the directorship of the person, and he can also be fined £5,000 towards each of the offence. And these offences are covered under the Companies Act of 2006. So as an example, if we also see that sometimes auditors look at providing or look at let's say signing off accounts, but they fail to pick up misleading information. And one of the reasons why we see this is when you look at the companies, large companies like Enron and some of the companies which fail because of the reason of fraud or non-reporting of or misleading information, you would see in those cases the auditing firm is also fined, and they are also seen as a part and parcel of helping to commit this particular offense. And this is then also termed as covered under the Companies Act and also covered under the aspect of criminal offense. So when you are seeing an aiding and abetting crime, indirectly or directly, then sometimes you can, as a firm, be also fined. If it's an auditing firm or it's an accountancy firm, then it could also have repercussions for you as a business, because you have not complied with the basic guidelines of, say, certain acts and certain laws, and in those cases you're also liable for fines or some sort of penalties which can be levied. Now, when we talk about in general some of the offenses and penalties related to money laundering, one of the things which we'll come across is something called Phoenix companies. Have you heard the term Phoenix companies? What are Phoenix companies? Any idea?
Phoenix, I don't know.
Phoenix companies, yes.
Heard the term Phoenix companies. I heard the term, but have no idea what are they.
Okay, so I'll give you a practical example. Sometimes what happens is if you know that the company is being dissolved or the company is going into administration, sometimes you would see there are businesses which would be looking at purchasing these insolvent businesses which are going into administration or liquidation, and they are normally going to be purchased because the company has lots of assets which are going to be liquidated, or in some cases you would generally see that there are companies which then are created under similar names, wherein the idea is to associate that with the previous company and then, make off with some of the profits. So basically, when we talk about identity theft, in the case of individuals, when we talk about some sort of a theft happening at the company level, we normally use the term Phoenix company. So under the sections 216 and 217 of the Insolvency Act, in such cases where companies, or say for example, with similar name, are used in association with companies which have been previously dissolved to look at, getting benefits, or, obviously, let's say, taking advantages or benefits because of a similar name or similar, let's say, functions, then in those cases, this would be termed as what is called Phoenix companies. So basically, if I look at the broad meaning of this particular term, this will be used to define practices of carrying on the services of a particular business under the same name, or trade successively under the same name, so that you are able to basically look at doing fraudulent activities. Example, you have a company which is ABC Limited, and that's a company running for 15, 20 years, and it's a well-established organization. You end up registering a company, another name, which is called Alpha Bravo Charlie Limited, but your trading name of that company is ABC Limited. So when you conduct activities very similar to the original organization which is in existence, and try to use the same name to create and generate business or activities related to it using fraud, then in those cases, those companies would be termed as what are called Phoenix companies. Is that clear?
Yeah, 100%. Yeah, thank you.
Yeah. So in this case, what we are looking at is, when we look at money laundering, when we look at fraud, and when we look at some of these, practices happening within the sector, they are also done from a point of view of creating Phoenix companies, or companies, which are being created with similar names of organizations which have gone into insolvency or have gone into administration or liquidation, but you're trying to benefit from the same name or the provisions of the company which has gone into administration by creating something of a very similar nature, and then using the the reputation and the services which the company used to provide to make profits, and that would be covered under that. Now, this brings us to the last assessment criteria, which talks about explaining the offences and penalties which are related to computer misuse and cybercrime. So here we are going to be focused on two particular acts. One is the Computer Misuse Act of 1990, and then we're going to be using or talking about the cybercrime, which is basically used as an activity under the Fraud Act of 2006. So we need to be aware that when we talk about, because most data today resides on computers and PCs, and most of the way things are moving, we see most transactions, most records now being kept electronically. So we see the fundamentals of this being conceived back in the 1990s, when the Parliament created a legislation which is the Computer Misuse Act, and that was related to that it is a criminal offense if you are using somebody else's PC or data and modifying it, accessing it without appropriate consent or permission. This also closely relates to the Data Protection Act, because when we look at the Data Protection Act, in some cases what we generally see under the General Data Protection Regulation now, which updated in 2018, we see that information about an individual, a particular business, or an organization, if you're keeping the records within the European Union, they cannot be shared without the permission of the client or the people involved. And in some cases, some organizations, if they're large enough in terms of operations, under that particular act, need to have what is called a designated data protection officer, DPO, and that data protection officer can receive requests from clients if they want the information to be deleted or removed from their database or records. Then they can so request by writing to the DPO within that organization, and that allows unnecessarily storage of data to be removed from organizations when it is not being used. So when we look at the acceptance of cookie, when you look at browsing a website and there's a cookie which comes up which says, the EU cookie law which was introduced, again, is a small example of one of the crucial bits of thing which captures information when you're browsing online, and it is able to record the activity that you do online, and that also needs to be priorly, there's an option which the companies need to give to the client before they collect that data. And in some cases, you see this as marketing preferences, sharing of data with third parties, and also keeping a track of your activities that you do on the website. So things related to unauthorized access of computer material, unauthorized access without the intent, or permission of the individual or the organization, and unauthorized act, which is basically maliciously looking at intending to impair the operations of a company or a business, would all be covered under the Computer Misuse Act. So this is something that we need to be aware of. Then the second one that we talk about is the Fraud Act of 2006. Now this was radically changed when the Criminal Act was introduced in 2006, which is the precursor of this was the Theft Act of 1978, because in those days obviously PCs and other things were not there, but because now data resides electronically or is available electronically, then in this cases what we look at is that sometimes when we talk about people having access to information and that information being used for reasons or for benefits of a particular client, or benefits which could lead to let's say creation of money or monies, then in those cases this would be all covered under what is called the Fraud Act. Now it is also important that we note that when we talk about the Fraud Act in general, what we also look at is in this there is a provision which is there in the Act. So if say for example facts are to be established, then in those cases criminal liability can ensue. That's the important bit, that here if the let's say the offense is established that there has been a fraudulent activity which has led to the, say for example, unnecessary gain which a client has had on because of the activity which has been carried out, or a misrepresentation which has been done, or failure to disclose some information has happened. And in some cases, if people have used their position or power, in order to basically gain, say, substantial benefits, then in those cases, criminal liability can also ensue, and that is also covered under the Frauds Act of 2006. So essentially, this deals with, when we look at from the accounting profession point of view, if you're obtaining services dishonestly or providing services dishonestly, which is leading to some sort of fraudulent activity at your client's end, then in this case, you're also going to be liable under the criminal law. That's the bit that we need to be able to look at. Is that okay?
Yeah.
I want to ask a question there.
Go ahead.
How do we protect ourselves from being involved in things like Computer Misuse Act? Let me say example. If you are browsing a website, a pop-up window come up and say, click on this if you want to have access. And you click on that, and to the best of your innocence, you are taken to a website that you never wanted to do. And of course, you have clicked. It has logged your name, it has taken your data, and so how do we ensure that we don't fall into such traps?
See, there are a couple of things that can be done in this case. One is, for example, when you look at certain standards which have been done and, basic bits which the organizations are required to have. So, for example, when we look at if you're dealing with client data or data which is generally confidential and you are dealing with that data on behalf of your client, then it is expected that your infrastructure or your PC or the infrastructure, IT infrastructure, either side of things, basically have certain minimum requirements in place. So things like websites, which you give an example of now, generally speaking, as a matter of practice, any website which does not have a SSL certificate or a secured security certificate, which basically appears as a bit of a lock in front of the website name. Those are malicious sites on which, obviously, it is expected under the policies and procedures defined within the organization that those sites should not be accessed on the browser. The other bit that we look at, so there are going to be, so if I answer your question, I will answer it from two aspects. One is there are certain basic practices that you're expected to adhere to when we talk about these side of things. So things like an updated browser, looking at certain basic requirements to be able to have data on the PC, wherein you've taken requisite permissions and it's under some sort of, protective, let's say, coverage. So, for example, a basic antivirus needs to be installed, which allows you to stay away from malicious sites or phishing activity, which can happen when you're browsing the internet on the PC. Now, in some cases, you would generally see that the browsers, because there's a compliance required from the industry side as well, sometimes when you click on a certain link, the Google Chrome browser or the Internet Explorer will automatically flash a message that you're trying to go to a site which is not secured or, is identified as a malicious site. So in those cases, those basic bits have to be practiced when we talk about, protecting ourselves from a point of view of, cybercrime or fraud, which can happen online. Now, the other side of things, when we talk about, when we see generally this kind of an activity happening, what we can do is, as accountants, we can prevent some of these cybercrime, related or cyber-related threats to happen. When we talk about, these being prevented, because we are aware of how this can be, say, for example, minimized. And the other bit tending to be that we are aware of some of the practices that we need to ensure that when we are having clients' data, our PC and our infrastructure, the IT infrastructure side of things, meets the basic stipulated guidelines which have been set by the Cybercrime Agency in the UK. So when we look at how, as accountants, we can protect ourselves from cybercrime, there are lots of different ways through which this can be done. You protect your computer network. If you're under a network, sometimes these PCs on which client data is stored, it is required that you keep it offline and not have that as a connected PC to avail of certain records which could be, important or which could fall prey, on the activities of cybercrime if the PC is connected. Things like a firewall, things like antivirus software. You're looking at, software being updated to ensure that these kind of instances are minimized. And some of these are best practices, like when we talk about changing passwords regularly, using different passwords, data encryption, which is something which is quite important. And obviously going into manageable sites when we talk about, going to safe sites. So in those cases, you have certain sites in which there are certain, certifications which are there. So when you look at certain sites, they will say SPS, or which will basically mean that, these sites are protected by relevant agencies, and that is where it will allow you to minimize such, instances of cybercrime which can happen.
Okay. Thank
you. Is that okay? For banks, obviously, I'm just trying to recollect for banks and some of the financial related sites, like PayPal or sites which have e-commerce shop or, through which you buy certain things. There is a basic certification that they need to have in place, which is basically covered under, the legislation which the government has introduced under the, the Cybercrime Act, the Computer Misuse Act and the Fraud Act of 2006. If I remember that, certification, I'll let you know just in the session. And that is a must that you get to see on some of the banking sites or, some of the sites which basically use cards or store data or, obviously look at transaction in terms of data.
Okay,
so there are various licenses which some of these sites also need to have, and that basically protects some of the transactions and the information which is being collected on these sites, and that information cannot be shared as third party with the third party, or data cannot be shared with third parties. So some of the banking sites will have, the FSCS logo. If you have seen, if you bank online, you would normally see that those sites have to have compliance with the Financial Services Compensation Scheme, which means if you bank online or you have access to your client's bank account and you do the banking and the branching side of transactions or invoicing side of transactions, then obviously the FSCS ensures that some part of this transaction is covered if you are a victim of cybercrime and things like that. Is that okay?
Yeah.
Now, so in terms of looking at this particular last assessment criteria, which talks about offences and penalties which are related to Computer Misuse Act and cybercrime, we are basically looking at some of these slides to objectively understand that what are the basic things that you need to be able to do to maintain obviously your professional independence and offer some of these services which are safeguarding client and client's data. And on the other side, we are also making sure that the infrastructure side of things that we have, are basically ensuring that this kind of an activity is minimized when we are online and obviously have access to the information which is on the PCs and that relates to our client. Some of the slides that you see here I've added primarily to ensure that you are able to also go into some of the key acts that we're looking at, like the Bribery Act. What does it entail? So in one slide, it basically tells you and gives you a proper explanation of, what the act is and how it is important and related to, the accountancy profession. Now, any questions on this particular assessment criteria in today's discussion?
No, it's okay.
Everything is all right.
I've tried to actually cover, most of the bits that we see on the indicative content here. Things like ethical code, looking at guidance, relationship interaction, corporate governance, and ethical practice. You look at elements of malpractice, fraud, bribery. What are the various acts related to it? When we talk about money laundering, penalties which are applicable, the acts which are applicable under cybercrime, and then, making sure that we look at it from a individual standpoint of view as well. So in those cases, we look at GDPR, confidentiality, disclosure, and those bits, are covered on some of the last, slides of this particular session. So with this, we come to the end of Learning Outcome 3, and this is mostly theoretical. Some parts of it that we have discussed, are basically for our understanding and what role as accountants or as people within this profession we play and we need to be aware of in terms of information and how to sensitize this information back to our clients in terms of the outcome. And then in some cases, how can this information be used to prevent criminal activity is what we need to be aware of when we talk about Learning Outcome 3. Okay. Good stuff. Yeah. So let me go one by one and just check with everyone if there are any questions. Aid, any questions at your end?
No, I'm fine, thank you.
Okay. Adnan, any questions at your end?
No, I'm all right. Thank you very much, Simon. You explained everything nicely. Thank you for that.
Thank you. Mr. Chima, any questions at your end?
Want to know, if I want to go through these slides once again, where do I go to have a look at them?
Okay, so if you have to go through these slides again, what I'll quickly do is show you the, so just okay, thank you, no issues, that's great, thank you. So I'll end this session here.